we're back for module number 4 here. We're going to be diving into the zigzag correction and then also regular flats, expanded flats, and running flats. So these are all known as ABC corrections, and they are our basic corrections. And then the next module will be going over triangles, which get a little bit more complicated. And then we get into complex structures known as WXY and WXYXZ. So we're going to be starting off with the basics here. We're going to be talking about the wave count, the characteristics, the guidelines, and the rules associated with corrections in this module. And then once we're done with all of the corrections, we'll be taking it and applying it to the charts and putting it all together. Let's dive in. All right, so off to the left side of TradingView here is going to be a, let's see, 1, 2, 3, 4, 5, 6 tab down. We're going to have options here for our Elliott impulse wave. We're going to have A, B, C, D, E, WXYs, all of our corrections. Everything that we need for Elliott wave for the counts are going to be right here. So we're going to use the ABC here. This is our 3-wave sequence for a corrective wave. They can point upwards, they can point downwards. They are counter trend. So if your trend is moving upwards, you will see ABC corrections going counter trend, moving downwards. If your price is moving down, then your ABCs will point up. The biggest thing that you need to know about ABCs is that your A wave is always counter trend. Okay, it is always pointing counter trend. So your ABC has to be correcting something. It's correcting its recent price action. So with that being said, this is the most basic form of the ABC, known as a zigzag. Okay, make sure that you've got your PDF sheet here in regards to the cheat sheet for all of the guidelines and fib relationships here for the corrections as we move through this, so it makes it a little bit simpler for you. But the zigzag is known as a 5-3-5 structure, which means that the A wave and the C wave both have impulse waves inside of them. Okay, so because we're on a smaller degree, we can have impulse waves that move counter trend. So in this case here, the trend is moving downwards as such, like this, and then we are correcting it. And with a zigzag correction, a 5-3-5 sequence, you're getting an impulse up immediately. You're getting a smaller ABC 3-wave pullback inside of your B wave. I'm going to change these colors, make them a little bit easier on the eyes there too. I think yellow is a good match. And we're going to get 5 up for C. Okay, the C wave, here are some rules and guidelines for us. The C wave always has 5 waves in it. Okay, so always the C wave is going to have 5 waves in it. Very rarely do you see an ending diagonal in the C wave, but it is possible, but it is rare. So in the last module, I had mentioned the A wave of a zigzag could have a leading diagonal in it. That is very true. You will typically see a leading diagonal in either the first wave of an impulse or in the A wave of a zigzag. So this could be a leading diagonal inside of that A wave there. ABCs measure out correctively when it comes to Fibonacci. And we still measure them with the 3-pivot trend-based extension tool, where we go from low to high to pivot. And this is also known as 0 A and B in order to target our C extension. Okay, the C extension will typically go anywhere from 0.618, 1-to-1, 1.236, 1.382, and even as high as 1.618. Typically, anytime beyond the 1.618 or even at the 1.618, you're going to be dealing with an impulse wave. What I want is at least a little trigger to go off in your head that says, okay, we just hit a 1.618 extension. Is this a third wave or is it a C wave? Okay, so I just want you to question yourself and keep yourself in check so you don't get too tunnel visioned or biased towards just one count. The zigzag is the hardest correction because it is almost identical to a 1-2-3 of an impulse wave. If you take a look at those similarities, right? A 1-2-3 also breaks down into a 5-3-5 structure. The only difference is when you get the 4th wave and then that 5th wave in. So the things that are going to help you differentiate these counts when you get these close of similarities is, one, knowing the time frame and the trend in your time frame so that you know what subwave count you're in. So you know what the larger trend is, you know that you're correcting it. The other thing too is the Fibonacci relationships with it. For the most part, C waves are going to hit a 1.236 to 1.382 pocket. They're not going to hit the 1.618. Does it happen? You bet. But for the most part, we have a higher probability of being able to assume this wave is a C wave if it stops and has 5 completed waves within the 1.236 extension. And it's important to recognize that 5 completed waves. So we're always looking at the subwaves to break it down and confirm whether or not our account is done. We're not just basing it off of one single extension. Remember, we want to find confluence, and we want to find as much confluence as we can in order to support a bias towards one count over the other. Okay, so the B wave is this retracement wave here. That is retracing the A wave. So it's pulling back, retracing the price movement of the A wave here. And this is found just like we find the wave 2 retracement using the Fibonacci retracement tool. And so by grabbing that, the B wave of a zigzag is again identical to the wave 2 of an impulse. It will come down most likely to the 0.5 to 0.618. Now these are just guidelines, so it can retrace shallower and it can retrace deeper, but it cannot come back beyond the start of the A wave if the A wave is a 5-wave impulse. So if this is a zigzag, the zigzag cannot come back down to here and then move forward. Okay, so those are our qualities about the ABC here. A 535 structure, the B wave typically retraces back to 0.618 to 0.5. The C wave typically extends out to a 1.236 to 1.382, but it can also hit anywhere from a 0.618 to a 1-to-1. I want to show you what that looks like too, just so you have a visual understanding of what exactly an ABC can also look like in regards to this here too. And give a couple of examples here. So all of these are accurate zigzags. So grabbing the trend extension tool here for A and B, this C wave could hit a 0.618. 99% of the time, you are not going to have a correction, a C wave that hits underneath the 0.618. This is about as small as it gets. And so this can help eliminate a lot of counts too. If you're not hitting a 0.618, you're probably dealing with a different count, or the correction's not over and you're measuring it incorrectly. So with that being the case, keep that in mind. That 0.618 has saved me a lot throughout my trading, because if something doesn't hit it, I think to myself, well, we're probably still correcting. We're probably going to add on to this. And so I look at it differently, and that's helped out significantly. So keep that in mind. It's not a set rule, but 99% of the time it will save you in the long run. So 0.618, 1-to-1, like that, 1.236 and 1.382. Yes, it can go as high as 1.618, but if it does, you should just consider, is this an impulse instead? Is this a 1, 2, 3? Okay, and that way you're not being super subjective and tunnel vision on just one count and only one possibility. And then you've also got this one over here too. This looks like a regular flat, which we're going to be talking about next. But because of the 5 waves in the 3, that's what's going to differentiate it. So these are our zigzag examples. Let's dive into the 3 different types of other ABCs, which are known as flats. And there's 3 types of flats. There's a regular, an expanded flat, and then a running flat. And I'm going to make it really simple because it's not a hard one to really get, but all of the flats have 3 waves in the A wave. So think about this. Your zigzag correction is the only correction that has 5 waves in the A wave. Okay. That really helps eliminate the possibilities that you could have and what count is what too. So with our flats here, this is known as a regular flat here, and it has 3 waves inside of the A wave. And we're going to make that, let's do red this time. And we got 3 waves in the B wave, but the C wave, again, is still going to have 5 waves. So C wave always, always, always has 5 waves in it. And those 5 waves have to meet the impulse Elliott wave rules. Okay, so wave 4 can't come into wave 1. Wave 3 can't be the shortest. It's got to meet that criteria as we dive into this, okay? Otherwise, we're dealing with a different type of correction. So regular flat here. The regular flat has the deepest retracement for a B wave. It typically retraces about 80 to 90%. So 80 to 90% on the B wave, and it can retrace up to 100% or 99%, but it cannot go below it, or else we're dealing with an expanded or running flat. So, and that's the only difference between the types of flats. So a expanded flat is where the B wave extends beyond the start of the A wave. And a running flat is where the C wave fails to break the high of the A wave. So both the expanded flat, this one here, and the running flat both have a B wave that dip below the start of A wave, okay? Notice that here, below the start of A wave. The only difference is where the C wave extends out to. So, and then you just call it a different name. If the C wave breaks the high of your A wave, it's an expanded flat. If the C wave does not break the high of your A wave, it's just a running flat. Okay, so some Fibonacci relationships in regards to flats here. Let's start with the expanded ones. So expanded and running, the B wave, you're going to use the fib retracement tool for this. And this is why we put on the extra fibs that we did that go outside at 1.236 and 1.382, and then negative 0.236 and negative 0.382, is so that we can easily measure these expanded B wave pockets, much simpler than having to pull the fib retracement tool from multiple directions. So always left to right, and we're just going to pull from the start of A wave up to the top of it. And the B wave is going to come to 1.236 to a 1.382 pocket. Okay, so anywhere right in here is your expanded B wave pocket. Okay, it should not surpass the end of the 1.382. Okay, so in this regards here, we have the 1.618. Typically, we will still pivot off of a 1.618, but more than likely, we're not dealing with an expanded B wave anymore. Okay, so the most favorite spot is the 1.236, and then sometimes you'll get a wick that just comes right down into the 1.382, and so it's always a nice entry if you can snag it. So with that being said, that's where our expanded B pocket is, and then our C wave for an expanded ABC, for an expanded flat here, will extend out past the start of the A wave. Well, if the B wave comes down to a 0.236 to 0.382, that means that this move here has to be at least a 1.236 just to get to the top of the A wave again. So expanded flats are typically a little bit bigger and usually hit a 1.618 extension. Okay, so we can use our trend-based extension tool again, and we're always going from these same pivots still, 0, A, and B. Even though B goes and drops below the start of the A wave there, we're still pulling from this move here. Okay, so we're always pulling from the 0 of our corrections. And this will be really important as we get into complex structures because of how corrections will connect together to get extended and become complex. It's important that we pull our fib extensions and retracements from the right pivots. So expanded flat here, you can see that our 1.618 extension is right up here for the C wave. So this is what an expanded flat looks like. And it's kind of awkward in that sense. You can see that, you know, that if you draw trend lines from the points, that both ends are expanding outwards. And this would result in a move to the downside. So because the A is always correcting the previous price action, it is always counter trend, which means that the trend is downwards because A is moving up. So that means that we're going to continue by dumping to the downside here, and that we came into this correction as such. We came into it, we corrected, did an expanded flat, and we're continuing the trend again. Okay. And then we've got our running flat. Okay. So the running flat is exact same as the expanded flat, but the C wave is just truncated. It's just not surpassing over the start of the A wave. So for the C wave, you typically get anywhere from like a 0.618 extension or 1-to-1. And at the highest, you get that 1.236, so long as the B wave hit the 0.236 negative down here. So with that being said, again, we can pull the fib retracement from 0 to A, and we're targeting this expanded B pocket down here between 1.236 and 1.382. And then we're looking for an extension for that C wave here. And we are going to grab that trend-based extension tool here as such. And you're going to see that we hit a 1.236 here. 1.382 basically gives us a double top there. And we can hit the 1-to-1, and we can even hit the 0.618. Take a look for a second at what that looks like in regards to a running flat. Okay, These are very bullish or very bearish corrections if you think about the psychology behind them, okay? If the trend is moving downwards and A corrects up and then the B wave overextends, even though it's a corrective move, the B wave is always a three-wave move. Think about that. A three-wave move pushes us past a new low or a new high, right? Depending on your trend. If your trend is moving up, then the B wave is literally creating a new high. And one thing that's really important to recognize with expanded flats is that between your wave, and I'm going to circle these for you guys, between your waves here, where we end and we start to correct, and your B wave, you're going to have divergence between these two pivots on your RSI. Okay, so very similar to the third and the fifth wave, you also see divergence as well. Well, guess where you see running flats and expanded flats the most? In fourth waves. Why? Because if the market is very bullish and you're getting this big, humongous wave, which is a wave 3, then anytime it dips, people want to buy up the dips. And so people that missed out on this whole rally and think it's going, to the moon or just they want to FOMO in, they don't want to miss out on the opportunity to make money, they start buying up any sort of a correction back. And by doing that, it ends up pushing the price higher, breaking that previous high, and it creates divergence, looking like it's a fifth wave, but then it corrects back again. People buy it up again. And this time it fails to even break a new low. It makes a higher low, and then it continues back on with its fifth and final wave. And that's where we get our impulse wave again inside of that. And so this here is your expanded ABC right here. And that's your running flat or an expanded flat where the C wave can also dip down right past, but then gets bought right back up and continues its trend. So this is how it falls into place. You see them typically in the fourth waves. You can see them in wave 2 as well. But from a psychology standpoint and understanding what is going on in the market when we see these type of structures, it makes sense to see it more often in the fourth wave. So in regards to that, that's our running flat. That's our expanded flat. We've talked about the 1.236 to 1.382 pocket for the expanded B waves. It's important that the B wave does not go past the 1.382. If it tags the 1.618, it invalidates it, in my opinion. So with that being the case, you can make much better counts by understanding that. So I also want to bring in there then the regular flat back here again, and recognize that this move here, the B wave cannot break down underneath the start of the A wave here, or else it becomes an expanded flat. And then these are your two options that you're left with. So out of these three corrections, think about that two of them, so 2/3 of the corrections in flats, the B wave actually extends past it. And in the flat correction, it's typical for the B wave to come 80 to 90%. Okay, so that's a really important characteristic because it becomes very obvious when you start to see these types of corrections in the market. And flats are more often than not, they're connecting waves. So what that means is that they're typically slow in time. They kind of move sideways. They usually create like a channel, and they are usually inside of a B wave more often than not. Typically inside of an A wave in a flat, you typically have like a zigzag. So the other thing to keep into consideration here is that the B wave, although it's typical for it to come back to 80 to 90%, it is not a rule. So the B wave of a flat can also retrace shallow too. It can come back to 0.5, 0.618. I've seen them come back to 0.382 if the market is bullish enough for it. Okay, so it's just a guideline to give us an idea of what they look like, and we'll hunt around for them in the market here in just a minute as well. The last point that I want to make is that we've talked about 4 different types of corrections. We've talked about the zigzag, we've talked about the regular flat, the expanded flat, and the running flat. We've talked about the similarities between the expanded and the running flat, and how the only difference between them is where your C wave extends out to. Expanded extends out past the A wave, and running flat, it doesn't extend out past the A wave. Okay? Your A wave is always counter trend. It's always correcting your trend. Okay? The regular flat and the zigzag. Keep in mind that the zigzag is the only correction. It's the only ABC that has 5 waves in the A wave. So my famous saying that I have is, if it starts with 5, it ends with 5. okay, because there's no other correction. And if you think about an impulse wave, a wave 1, well, you know there's going to be continuation with a 5 waves. So if something is starting with 5 waves, there's only 2 options for it to go. Either it's going to see continuation for a C wave, or it's going to see continuation with an impulse wave, a 3rd wave. Okay, so that really helps narrow down the expectations from the market too when you start to analyze these counts. But as we're going to be getting into the next module, you're going to be learning about triangles and then complex structures. And the reality is that corrections are the most difficult part about Elliott wave. And this is where the majority of your attention needs to be focused in order mastering corrections. Because when we get into complex structures and the fractals of time frames, it's going to get complex. And the more comfortable you are with knowing everything about an expanded flat or running flat or a regular flat and a zigzag, triangles, so forth, you're going to be able to see and relay that information into the charts so much more thoroughly. Okay, so with that being said, let's go ahead and dive into the charts above and just take a look at what are some 3-wave structures. What do ABCs, zigzags look like? So right now with Bitcoin, we're in a great time to really see the structures of 3 waves here. I'm going to kind of just draw them out just at first so that you can see the eyesight of it. Okay, so take a look at this move here. I'm going to use a better color than that too here. Let's go with yellow. Okay, so look at that 3-wave move. Had this been a 5-wave move, we would have had a move up and then another move down. That would have given us 5 waves. Okay, let's take a look at this move here. 1, 2, 3. Okay, again, if this was 5 waves, this would have extended down further, probably bounced up and then given us follow through with another wave. Okay, let's take a look at a couple more here. Notice this one right here. Okay, so again, another 3-wave move. Okay, this is a really good example too, to take a look at the contracting price as well in regards to, take that magnet tool off, in regards to this movement here. And just notice how it's contracting and kind of tightening up as it comes down here into this range here. And this would be a great example of a leading diagonal inside of an A wave of a zigzag. So A, B, and then a C. Okay, again, we can take the trend-based extension tool. We're using the pivots 0, A, and B, and we're looking for corrective measurements or extensions, 1-to-1, 1.236, 1.382, and we typically want to stay away from that 1.618. If we do hit the 1.618, we just want to think to ourselves, could this be a 3rd wave? Okay, let's go back here and take a look at the ones that we'd highlighted back here. Okay, this being a 3-wave structure, what's the extension that we hit here? Again, a 1-to-1. So a lot of times too, you'll hear in the markets A equals C. Well, this is what they're referring to as well, is that C is a 1-to-1 extension of A. This is pretty typical for a flat correction, like a regular flat correction, or even a zigzag. But typically the zigzag will actually extend out to about a 1.236 to 1.382. The reason for that is because that C wave is just so impulsive, and the first A wave started with the impulse. So most people see it and look at it as an impulse wave. 5, 3, 5. They're looking for continuation, maybe even all the way to the 1.618. All right, let's take a look at this one here. We had highlighted this one here as an ABC. So let's just take a look at the extension on this one as well. And we got pretty close to the 1.618. We didn't tag it. And most of the price action up here closed and consolidated around the 1.236 to 1.382. So it would have made me a little bit, skeptical as, could this be a 3rd wave? Can we see follow through here? And that's where we really dive into breaking down the subwave breakdowns as well. The A wave can be the tall tale sign of it all, because you know that if it's a zigzag, okay, yeah, it could have 5 in it. Therefore, this could be a 3rd wave because we have a 5-3-5 structure. But if your A wave has 3 waves in it, then that already eliminates that this is a 3rd wave impulse. You know that you can't start a true impulse wave with a 3-wave structure. So the only one that can really be mistaken for an impulse is the zigzag. If your A wave has 3 waves in it, then that eliminates this move being impulsive. So you should be able to identify if this is a 3-wave move. You should be able to know right off the bat whether or not you're going to be able to have an impulse leg down, or what your trend is and how it relates to your time frame as well. So when I talk about time frames, I'm talking about the sense that Let's take, for example, this move here. Okay, this was basically like a leading diagonal. We had a price contracting, moving down to this point of apex here. And when we dive down into these subwave counts, that's what I'm referring to with time frames, is that now we need to move down in order to see these subwaves even better. We need to move down to a smaller time frame. So let's just take, for example, I went from a 1 hour time frame down to a 15-minute time frame. And we're going to snap over here to price. Zoom out. And here we are. We're almost there. Okay. So in regards to this here, there's a lot of price action that's going on and wave formations inside of this leading diagonal. So this leading diagonal is a motive wave. It's telling us that price is going to go downwards and that the trend is down. But notice that we have plenty of 3-wave cycles that are moving upwards. So we're counter trend here, but maybe for this small period of time here, this is a short-term trend on a 15-minute time frame. And so this here is correcting that. But overall, this move here was correcting this run here. Okay, so the trend is going to change within your time frames as you move into sub waves. So the smaller the time frame, the more it's going to shift around. And so it's easier to count and it's easier to figure out the trend when you zoom out to a higher time frame, because it consolidates it all together and it says, hey, look, 4-hour time frame right here is very obvious to see that even though this was a movement up and this move here was correcting this run here. So all of this was correcting at the time, this run up here. But this run up here was correcting all of this price movement coming down here. Okay, so you have to be aware of what the larger trend is in order to make sure that you're following the right ABC corrections as well. Let's take a look at maybe just 2 more examples on a larger degree. So for example, look at this ABC right here. Okay, this would be considered a running flat. Why would it be considered a running flat versus a regular flat? Because the B wave broke the start of the A wave there. Okay, so because of that, and it's a running flat because we double topped. So more than likely we did not, not more than likely, we did not surpass the start of our A wave, the end of our A wave there. So this is a running flat scenario here. So with that being said, we can take the fib retracement, we can go from here to here, and we would see that we passed the start of the A wave, but we didn't hit our 1.236. Now, this is just a guideline. It's just the typical area where we typically will come to. And so with that being the case, now we can measure for our C wave 2 and say, hey, did this hit a 1-to-1, 1.236? And we can double check that. And we want to double check too that the C wave has 5 waves in it. So we hit a 1-to-1 extension. We've got 5 waves in this when we go down to the subwave breakdown. And what we're seeing here is if we're seeing an ABC, a regular flat or a running flat, it means that the A wave is counter trend, that this move here is correcting something. So we have to look back to the left at previous price action and realize, hey, this was the bigger move right there. So we're correcting, this is the trend, and this move here is correcting that trend. And therefore we see continuation back to the downside. Okay, let's go look at one in a bull market here to end off our last one. Okay, so this move right here is a pretty good one. So we would argue that you can see the divergence here and here. So this top here, okay, notice you're really going to pair up the RSI with the expanded flats beautifully because it's going to help you differentiate what cycle you're in and what wave count you're in as well. Because notice the divergence between this top here and this one here. Okay, what this tells me is it tells me that this is a 3rd wave and this is a 5th wave, and that this is the top of my wave, but we broke the top of this high right here. And that tells me that because of the 3-wave move in here, notice that 3-wave move, that tells me that this is a B wave. It's not a 5th wave, because a 5th wave would have 5 waves in it. So a B wave tells me that this is an expanded B. So I need to double check that now. Now I need to grab the fib retracement and go from this high here and down to this low here, which is this wick. And then we would see, does the B wave hit the 1.236 to 1.382 pocket? And it does. It hit the 1.236 to the T. And so I'm looking for this move to be an A, a B, and a C. Okay. And so with that being the case there, we look at the divergence and you can see this divergence here as well. So now that divergence is our first one here and here. I'm going to get rid of that fib retracement so that we can see a little bit better. And then this move between this high and this high gives us divergence right here. Okay. And so that tells us right there that this is an expanded flat, and that we have not reached the top of our fifth wave yet too. So think about that real quick as we move in and look back at all of this previous price action here too, because it's going to help you if you can figure out where the divergences are, even in the middle of a count. It can help you determine all the different waves here. If you just look at the RSI and say, oh, okay, look, I see divergences here, here, and here. These are either third and fifth waves, or they're expanded flats. And so now you can split it up and break it up very nicely. But it makes sense as to why we got an expanded flat here, or a running flat, because of how bullish the market was. We just broke in some major resistance levels. People were FOMOing in. They thought we were going to 20K. They didn't want to miss out on the run. And that's where we also get, this big, large fifth wave move up right afterwards too. The dips got bought up quickly. And even just the wick on the bottom here, as it got eaten up was significant. So, with that being the case, those are the characteristics that you're looking for. That's how you're matching it up with RSI. And that's what some flats and expanded flats and regular flats and some zigzags look like. So with that being said, I'm going to end on module 4 on that note there. Make sure that you guys go take the quiz, study up, make sure that you're memorizing all of the characteristics about the flats and the zigzag as well. We're going to be diving into triangles in the next one.